What's the deal?
So we should talk about that, guys. I've seen so much, and Chris, I know you have. It's like both sides are disconnected to the real strength of they're actually in serious partnership, right?
Mhm.
You see that too. It's like the banks treat the vendors poorly, or the vendors, have nasty contracts or things like that. What do you think about that? You see that?
Oh yeah, I mean, you see that there's definitely a sense of an adversarial relationship, right, between the two. It's not often seen as seeking cohesion or contract terms or relationship terms that really meet the needs of both. And so you end up in this really screwy thing where you're absolutely right. We depend on each other for survival, and yet we don't treat each other like that. We've even seen that, I see it with some of the other associations nationwide, right? You just kind of, hey, oh, great. I'm glad you're here as a vendor, right? Go over there, set up your booth and shut up. Well, that's not how we've ever treated those who are products and service providers within the financial services space, because we say, y'all, man, pony up, come to DC with us, walk the halls of Congress with us, come sit in the congressman's office, because number one, your survival is just as dependent on these bank regulations and the laws that are coming down the pike, and as just as dependent as the bankers are. There's no doubt about it. And you also have a different perspective, at least, to share with lawmakers, because you deal with 80 banks in the state, and that banker only has their one perspective. So, we got to get past this garbage that you've got, kind of this adversarial relationship between vendors and bankers, and then also this idea that that vendors, and I'll use that term because that's what people say, but are second-rate citizens, second-class participants in the association world. It's just they're our members and we need them.
Well, a couple of nights ago, me and Chris were talking about this very topic.
Mm-hmm.
And we were talking about the fact that let's bring in 3 vendors. We already know who we're going to pick, but let's bring in 3 vendors. That looks good for the regulators.
Just burning time, man.
And it's like
Sure.
increasing their cost of customer acquisition.
Which increase your.
And then you turn around and go, man, these guys really nailed us on this contract. And I'm upset about that. And it's like, it's an ecosystem that all balances out. And the more you increase the cost of your own ecosystem, it's really hard to complain about what you pay.
Well, so a good topic there. So, Chris, thinking about collaboration in the ecosystem, to your point, right? Talk about bank collaboration, right? We've all seen it from credit unions. I know it's not everybody's favorite topic, especially in the banking world, right? But banks traditionally very competitive, but community banks, certainly I'd say the last 5 years or so, really in the last 2 or 3.
Yeah,
it's like everybody's homies, right? Everybody's working together. We saw it a ton through PPP and some of the things that you guys were doing. Are you seeing the same thing?
Yeah, I think there's definitely a better spirit of collaboration that is emerging. We've always had a really strong leadership division at IBAT, which is sort of your next generation bankers. And one of the cool things that's come out of that is the amount of collaboration. You get bankers from all over the state, even some in the same markets, get in a room together and they start talking about, hey, how are you tackling these issues and these challenges? So I think there's a desire for bankers to do that. I know sometimes there's some in-market tensions, or gosh, we're the good bank, they're the bad bank, stuff like that. But by and large, that's just not the experience I see time and time again. I think there's a sense that there's plenty of opportunity to go around. There's plenty of chance to work together to solve some of the issues. I'll tell you guys one of the coolest things that we saw during PPP, and you guys know this because we've talked about it. I guess not a PPP as much as a COVID story, right? We get a call from the commissioner of banking saying, we're really worried about these single branch locations, that if they get a COVID outbreak inside their bank, that they're not going to be able to open the doors, and they can't open the doors for a reasonable period of time to serve their customers. Game over, right? So it became a question of who within a 100-mile radius, what other banks have the same technology on the back end that they may be able to lend a couple staff people or something to go to that bank if they do have a COVID outbreak. How do we build those contingencies in place? And that is, I don't know that anybody had to do it, but the fact that people are willing to do it, right? And the fact, let me make sure you survive. We got to have that mentality top to bottom right now. I want to make sure you're able to survive.
Yeah, that was pretty cool. They called us and we're trying to find similar tech stacks for people that already understood what to do. The fact that these people were willing to get up, drive 80 miles to another bank and work there in somebody else's bank just because they knew that technology for a day just so they could help save another fellow bank. That's the spirit I'm talking about. That's what we really did. And it was a collaboration between, the state association, us, the people, mostly the people that were willing to do things like that.
Of course. Yeah, that's where the rubber meets the road, right? I mean,
a guy told me yesterday that went into a credit union. They were selling their product, and he said, "Man, have you got a minute? I want to call my guy right across the street, his competitor, call the CEO over there and said, you got to take a look at this guy's product." And he said, "A bank would never do that." And I said, "Hang on, not so fast." In the past, that might have been a true statement.
Yeah, I hope we see more of that, honestly, because we're at this moment, right, where we've got to be focused on the survival of the industry and not just feathering our own nests.
That's it.
And if we don't embody that, then we'll just be dinosaurs. We'll be talking about what used to be, and that's not what we can do. We got to do better than that.
And during the whole COVID event and PPP lending, we've tracked some of this stuff, and we're looking at, I think as of like the end of July, we were at 111.
Yeah,
mergers.
Chris, you saw that.
Yeah, he
that
posted
chart that we did
about it.
Yeah.
There's like 86 of those 111 did PPP loans. And we're like, well, that doesn't mean those loans wouldn't have been made. And I'm like, hang on. I worked with the people that brought the FinTech companies in. Every bank was doing it. The big banks were cherry picking.
Yeah.
So there's a real case to be made that those 86 banks making thousands of PPP.
I think it was 61,000 loans for $89 billion worth of PPP. I mean,
yeah, I get it that this, yes, in most cases, there's a community bank acquiring a community bank, but let's not pretend. I'm sorry, I don't care what the press releases say. Let's not pretend like in every situation, everything is just perfect and it's all sunshines and rainbows. You and I both know you can drive through town after town in any state in this country and see a place where a bank used to be chartered versus where banks are chartered now. And there's a fundamental difference in the vitality of those towns. Right. So this idea that, it's okay, they're acquired by another community bank, they're going to do right. We see the practical reality of that. And I'm not throwing any stones, but the practical reality of that is you become a deposit, that community often becomes a deposit base for another institution and not a place of vitality. I don't believe every one of those PPP loans gets made by the acquiring institution if everything's flipped. I just don't, because I don't know that I believe they have a loan officer that's going to stay in that branch in that community and be available to make those loans. So I can appreciate, everybody saying, hey, this is not as doom and gloom as it looks, but man, when the rubber meets the road and you need a bank in that town, you need a bank in that town. Yeah. That's the end of that story.
This is how it works. So when everybody takes a step up to make scale so they can compete with this guy.
Yeah.
Okay. You're still not competing with this guy. And now everybody's moved to this scale. The entire thing shifted. Yeah. It doesn't solve the problem you think it solves when everybody does it. The other thing, I take something off your branch your bank that I picked up. Now you're a branch of mine. And so I'm going to move that to my balance sheet in Atlanta, for example. Right. And then we next year look at our branch analysis and decide we really don't need you no more. Mm-hmm. Poof, you're gone. That's
right. Mm-hmm. Well, look, if people wouldn't be acquiring these institutions if they were going to keep everything the same, right? You're not going to keep staffing levels the same. You're looking for deposits, right, or sometimes assets. You're looking for scale. But that comes at a cost. At times you got to seek efficiency, and you just don't keep the body count there. And there's a real world impact to that, despite what everybody says is going to happen.
I've got a question for you. Now, I hear what I hear. I read what I read. I see what I see in the data, but I want to hear it from you. I mean, you get about this all the time. It's FinTech. Is that the bad guys or the good guys? And then we've changed the broaden the term to incorporate everybody.
The vendors are FinTechs.
Now everybody's a FinTech.
Oh yeah, everybody. Yeah, because that's the cool thing to be.
To the point of helping a bank decide how to compete. Whether it's a direct bank or whether they want to be a sponsor bank for FinTechs. Are you seeing a lot of that?
Yeah, you know what? A surprising amount. When we started talking about this a year ago, I thought nobody's ever going to eat these breadcrumbs. We did a survey pretty recently, and I know how y'all feel about surveys, but this was like legitimately, we asked bankers, and I'll just say this, okay? So there were only like 120 people that participated, but 120 banks that participated, but like 35 to 40 of those banks said that they were thinking about or open to making alterations or technology to facilitate direct bank offering or fintech sponsorship.
Wow.
Guys, I'm not going to extrapolate that out and tell you 35% of the banks in the country are doing that. That's what some of our consultant friends would do. But I can tell you that I'm shocked to even hear 35 to 40 of the banks in the state were already thinking in that direction. I think in part because, some of the breadcrumbs we've been putting out and things we've been talking about, not just we, I'm talking about, the collective we, about this trend. And let's be honest, I'm going to tell you guys, the current crisis to me right now is really not it's really not an interest rate, like net interest rate crisis. It's an addiction crisis to one type of income, right? So many of these banks are just built on net interest margin as that type of income. They've not diversified income. They've not looked at merchant services to really perform. They've written off other sources of income, other fee income. So now people are opening their eyes going, well, maybe there's something to this fintech sponsorship or direct digital banking that could diversify the way we operate, function as a bank. That's a good thing, I think. I think that's a net positive for the industry. We've got to diversify. The banks have to be more dynamic businesses at the end of the day. You just can't. I don't think you're going to ever be able to make it going forward if you're just solely reliant on one type of income.
Yeah, there's a big, and you can address this, but I talk to banks a lot where it's like, well, fee income, and they don't getting the idea. Finally, they've woken up to the fact that overdraft's probably not your coolest fee income.
Probably not. The market's kind of moving away from that, right? At least.
Yeah. But, we kind of we're numbers guys. We look at numbers all the time. We have all this data that we work with, and, we can see these things coming. And so I was interested to hear your answer, because that's exactly where it's going to get worse. Or let me say it another way. Going to get better. Banks are going to embrace a lot more technology, and that is the answer. But the key things that bankers need to wake up to is that, Gen X, millennial, whatever you want to go down the younger generation, right? They're not opposed to fees. They're opposed to certain kinds of fees.
Sure.
But it's very important that bankers really understand fee income still has a home. It's which fees. And if you can figure that one out, it's not that hard. Overdraft, that's a big no-no.
I'll give you a real world example of this, right? So my kids, they've got green lights cards, right? You see the commercial all the time. They've got those green light debit cards out of that bank up in the Northeast. And look, I pay $5 a month for each of those debit cards. Do you think 2 years ago, if you told me that I was going to ever again pay a $5 a month fee per debit card, I told you you're nuts. But but for what that account offers me as a customer, as a dad trying to move money around, give this person ability to get their allowance over here, yeah, absolutely, sign me up for the $5 a month. It's a deal, right? So to your point, Dave, I think you're exactly right. It's not about the fees; it's about what value the bank's delivering, and people will pay for value. Okay, I know that's shocking, right? But people will pay for value.
Yeah, one of the things too that we see in our information all the time is, and we track every feature of fintech. So we see, how does the money move and how does it get done? Is it going through your debit processing? Is it going through their primary processor, or is it going through Galileo? Or how's this fintech operate?
Was somebody using a prepaid, right?
They'll bend a prepaid card into looking like something else.
Pretty wild.
But it's pretty neat what they do. But at the same time, it's all a banking function. Every bank in the country can do all of these things. There's nothing magical happening here. And I think it's our responsibility to,
Can I touch that for a second?
Please.
I mean, mind blown, right? When you really dig into the data and all the features, you run through every fintech name that it's hardly even clever, man. I mean, we're not, look, the story we've all been told, right, of the big scary fintech, and you got to innovate and digital transformation, just buzzwords without specifics. When you get into the specifics, there isn't jack shit there, guys.
That's it.
I mean, it's things that we've all done for years and years and years, twisted a little way, right?
A little bit.
T's and C's look a little different, right? Or the branding or the marketing or the way that they're routing it, something like that. But it's just not this transformation that everybody's talking about. It's a lot of little stuff that's been bent.
Well, and it's easily replicable, right? I think that's the important thing too, is you don't look at anything that Chime or Varo Bank or any of these have done that a traditional bank couldn't also do, right? Yesterday, I look at my bank account and, man, I realized my payroll hit And I'm going, that's weird. It's the 13th or the 12th of the month. Oh yeah, my bank, my Frost Bank, right? I bank with. They just did the same thing Varo and Chime and those guys did with early access to payroll funds. Yeah, they've got the ACH file. Well, gosh, a year ago, everybody's looking at that going, this is a big deal, man. People are going to leave traditional banks. They're going to go to that. Any bank in the country could replicate that product feature. There's so many of those across the board that it's just it's not that difficult for us to continue to be competitive in that regard.
Well, I think that's a positive, right? I mean, we're okay. So
Yeah.
you mentioned, what'd you say, 35, 40 out of 100 or so
Sure.
interest in direct banks, sponsor banks.
Yeah.
We're seeing the same thing in the numbers. We've roughly doubled the number of sponsor banks in the last year, tons of new direct banks. And I think just talking to bankers, I'll tell you this, a year or two ago, a lot of the conversations, I mean, that's all I damn near do. Thanks, man. But pretty much talk to banks all the time, right? About all of this evolution. And it was typically, I'm getting the calls of like, man, FinTech, what does that word mean, right? What's going on with all of this? I've heard a lot of
I do this. Yeah.
That's evolved into the questions I'm getting now is, hey, would this be a crazy path to go down? Should I try this? I know these guys doing such and such. And that's kind of cool from a data perspective, guys. It's starting to become, we call it like FinTech peer analytics, right? Let's look at what the FinTechs are doing. Let's look at what other banks are doing and start doing a little comparison to our own model at our own bank and see if we can tweak some things. And I think that whether it's data and information or just enough stories and visibility, we're reaching a point where everybody's able to see what others are doing and realize that this isn't as foreign or alien as everybody thought it was before. And I think that's starting to reflect in the numbers, right? And it sounds like the same thing you're seeing, Chris.
Yeah, it is. And let me kind of just throw one piece on that. I pray to God that the regulators don't just throw cold water on it and kill it, right? Because, and I'll just use the example, you mentioned overdraft, right? And I'll use overdraft as an example because I think the market is creating solutions to overdraft now, right? The $100 grace, kind of grace buffer for you to be able to overdraw without incurring fees, or early access to payroll. Those things I think are effectively addressing overdraft. And yet you still hear the acting comptroller talking about, well, we're really taking a look at overdraft. We're really thinking about stepping in. Well, honestly, I think one of the worst things that could happen is for these things that are naturally taking shape in the market, to now have the regulators step in and try to control the situation or solve the problem when the market itself is trying to solve the problem. And I think that's, there's going to be some missteps along the way. People are figuring out this whole FinTech and FinTech partnership, direct digital. It's going to be some missteps. Hopefully that the banks are doing it in such a way that you really mitigate that potential misstep, right? But it's got to play out organically and naturally, so we can get those peer-to-peer analytics, those FinTech analytics, right? Because until we have the data, we're not going to know what works and what doesn't work, and how you can replicate it.
Well, we're starting to see, and there's some folks that were ahead of things here, right? FinTech isn't 3 years old or 5 years old. I mean, some of us have been here a long time, right? And I'm starting to see there's a lot of people that have been kind of working quietly behind the scenes. You're one of them, right? For a number of years on these topics. And so it's like there's this awakening right now, right? From all the banks, consultants, et cetera. And then you talk with the sharp people, right? Folks like you. I was talking to Julie about this, actually, just IBAT in general. You guys 2 or 3 years ago, right, were really quietly, but really digging into this and educating up, right? And so we're starting to see more and more people pop up that, hey, we do have some pretty good education on the banking side of the world, right? Yeah. And we do have some good leadership and some folks that have really educated up and are paying attention. And I was telling Julie, guys, y'all both laugh at this, but I was telling Julie, look at a few years ago, right, starting down that journey. And now I put Julie and Chris both. What do you think? Top 10 smartest FinTechy people that you know? Well, yeah.
No way.
Yes.
No way, but thank you.
Man, yes. Yeah. So look, what I'm saying is if you had to just play with the word innovation for a minute.
FinTechy.
You guys are supposed to be running a state banking association, right? You're not supposed to be the technology innovators, and it's
Right.
super cool, right?
Yeah, it is.
I mean, look, we're sitting here talking about it, and I mean, I wouldn't want to fight you on it, you know?
Well,
I mean,
well, look,
pretty
think
awesome.
about it. Think about it for a second from our perspective, right? I could get up every morning and I can write letters to everybody in charge, and I can bitch and moan about all the things that are unfair and unjust, and hey, it ain't fair that the credit unions get to do that, or it ain't fair that they and you know it would all be true. It's not fair. It's not right. It shouldn't be that way. But I have a decision to make about how we go about fighting for the future of this industry, and fighting about stuff that has happened in the past, or you know. You guys are the FinTech Cowboys. You'll understand. Maybe our friends around the country will too. Fighting about those issues where the horse is already out of the barn, you ain't getting him back in. You can forget it. I'm sorry. That's not how I want to tackle this problem. We talk a lot at IBAT about going upstream, right? Let's look at the issues that is actually facing the banks. Okay, they've got a net interest margin issue. Well, I could kick and moan about how the Fed ought to act faster. I don't have any control over that. So what I can talk about is how can we help position the banks to diversify their income, right? I can go upstream and help solve that problem.
Yep.
Right. I can't control it. So control what you can control. Focus on what you actually can affect. And you know, I'm not going to get up every morning and write letters to people to beg them to change things when we've got a certain number of things that we can change just by broadening our perspective a little bit.
Great point right there. I want to ask the bankers out there to do me a favor before you say the word credit union next time. I want to ask you, have you looked at you know, whether it's Go-To Bank or whether it's Chime or whoever it is that you may feel is a fintech threat? Have you looked at their debit contract? Pick one up and read it. If you haven't done that, you're seeing opportunities where they're not, and you're missing opportunities that are right in front of your face.
I agree.
Mm-hmm. Yep. No, and look, I'll be the first to say I think there's an uneven playing field in so many areas in financial services. The credit unions, of course, act more like banks every day. There's no doubt about it. And yeah, none of us should take that lying down. But what are we going to do about it at the end of the day? We're going to try to control our own fate and our own destiny.
There you go.
I'll give you a good one, Chris. What are we seeing? 1 or 2 credit unions that are sponsors, FinTech sponsors?
Before.
They can't hang in FinTech, right?
That's
You could probably have a similar conversation around direct bank, but you got to kind of argue that credit unions are the OGs of the FinTech brand, right?
Yeah.
Affinity brand.
Yeah,
Affinity, absolutely.
Right.
There's 78 banks that are sponsor banks and 4 credit unions.
So this is an area that the banks, especially community banks, are walking off with it, kicking the shit out of credit unions on sponsor banking and FinTech.
And that's where
Look, I like to say there's only one real difference between a credit union and an affinity bank. The affinity bank actually has a common bond between their customers.
All right. That's a good close. Yeah, that's a good close. All right, Chris, we're almost
See you
out of
next
time.
buddy.
Final thoughts. Final thoughts. Go ahead.
You know what, guys? I'm going to go back to that just thing I said a second ago, right? Let's control our own destiny. Let's not sit back and wait for the government to save us, the regulators to save us, for things to get fair again. Let's control what we can control. You talked about collaboration amongst community bankers, Dave. Man, it's bankers helping bankers. Make all of this together. We're gonna live together. We're gonna survive together. Let's do this.
I love it. I love it. All right, buddy. We'll catch you next time, man. Thanks for riding with the FinTech Cowboys.
My pleasure. Thanks, guys. Appreciate you having me.
All right, man. We'll see you.